Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 14th of June. Let's get started. Pause your players here. Read to the very bottom. It's important to you, and it is important to us. Summary for today. Green lights. Pretty definitive across the board. The short-term market models, which are appropriate for our 0 DTE and our 1 to 3 day swing traders, clearly in an uptrend. The cumulative tick, which is the instantaneous cumulative tick, you'll see it on the next screen. It closed above the previous day's close. It's another continuation day up. Railroad track pattern, which you'll also see on the next page, also has a continuation day up. So staying with the trend, trend is your friend. Long-term market model, which uses a series of what we call the ribbon or moving averages on the cumulative tick. It is bullish. It is not predictive, but it does show us where the current momentum is, and we're starting to see more and more of this lower left to upper right behavior, which is good because we were sideways for the better part of about 6 weeks. The SPX combo market model, just be aware we are out of the money call delta dominated to the above. Fairly remarkably, you'll see this on the next to the last slide. And we are in the money call dominant below our spot price. Very, very strong, very decisive behavior, really as strong as we've seen a bull in a while. There is no sign of net negative delta speculation yet. It will come in. Our market model is definitely focused on identifying that, and I think we'll see it as we go forward. Transitions, we closed at 43.69. The SPX PM complex, positive transition. The top of that range is 43.25. It's really unchanged from where we were yesterday. Minus trans is 42.45. It's a fairly wide spread. Just be aware of that. We have stretched above and below, but we can remain stretched as such. Sentiment will move more protective if we drop below that PM level, SPX PM level of 42.95. So really at 4,300, Livermore level, etc., is a big deal, and we'll want to pay attention to that. The SPX combo complex, which is the AM and the PM settled, and this is the week for the monthly OPEX, so this is a big deal this week. Plus trans is complicated by the JPM end of month June, the 43.20 strike. It's not a liquid strike, but it's got a reversal in that area in the PM complex, which is definitely coming through. Real transition in the combo complex, which is that AM-PM combine, is indicated down at 42.45, 42.50. That's a long ways to go down. Note that minus trans is really poorly defined. You'll see this on the last slide also in the landscape mode, but it is well below 4,200. And we are really, really stretched far above transition. Transition is often mean reverting. Just be careful, and that's all we have to say. The combo structure overall, the left goalpost 3,900, right goalpost 4,400. There's over 70,000 contract equivalents in gamma exposure. That's a lot. There's just no way to indicate any stronger level than that 4,400 line, and that's a big deal. So just be aware of that most likely we'll be targeting 4,400, if not today, certainly by tomorrow. The combo complex, which is those AMs and PMs again, it's really the mothership, over 20 million contracts there. It's the most liquid vehicle in the markets. Is out of the money call delta dominant above, so we have a green path to the north, and it's ITM call dominant to the south. So we have a full structure down as far as the chart, the displayed charts are going to show you here. JPM strikes for June and July remain flattened. The 43.65 is all but behind us in our rearview mirror, as is the 43.20, and only after OPEX do they reappear. So we'll see what happens. Probably the most important takeaway for today is that 4,400 is clearly in the crosshairs. We do think we will stall above 44.10. absent any upside targeting. Within the Discord, I want you to watch the value command, on the SPXP, which gives us just the PMs in isolation. That is the liquid vehicle of the SPX. You can run value SPXP 00 just to isolate today. I would urge you to run value SPXP 01 or 02 to include all the PMs through Friday, just to be mindful of where people are placing their bets. 4330, 0 DTE minus GEX, and if we lose that strike, could set a slippery slope downward. Just be aware of that. The charm strikes that we're watching, 4375, which is kind of a mid-level one, 4390, which is minor, and then the Papa Bear here is the 4400. It's a major charm strike. If we break above 4400 today, we'll have a tremendous amount of puts out of the money, calls in the money, and that will be supportive. And for the 0 DTE, could push us easily up to that 4410, 4415 area. We are watching the 4395 zone as an overnight parking area and that 4415, but again, watch value and pay attention to it. Taking a look at the cumulative tick model, it's a composite. We have 3 different timers indicated here. The bold white line is the CT, the cumulative tick. It's appropriate for the 0 DTE folks, and you can see that yesterday we did pull back a little bit in the afternoon, kind of digesting the buying that went on in the morning in various stocks. So this is net buying to the upside. The railroad track pattern are those 3 white lines that are roughly parallel underneath it. And you can see that they have been and remain in an uptrend since Monday. And then the colorful ribbon, red above cyan, expanding lower left, upper right, clearly an expansive phase, and you should be with the trend. Looking at the gamma levels here, key takeaway 4400 is indicated in the PM settled complex as plus GEX, and as the COI dominant expiry. So this means a lot of these calls are out of the money. Be aware of that. And as we go north, we'll be picking up more and more calls. If we take 4400, we have a major shift in moneyness, and that matters. That's a big deal. To the downside, 4320, which is that JPM strike, is indicated as the low point, so just be aware of that too. Probably worth mentioning that below 4300, which is a Livermore level, you can see that the gamma exposure just collapses. So really, we do think a sentiment change starts to occur. If we lose 4300, we are not anticipating it, but it is something to be mindful of. Probably more of interest to folks here is the 0 DTE. The 0 DTE chart shows a very clean transition at 4355, 4360. That is your line in the sand for today. So downside, just be aware that if we do pull back in any form, you could probably buy these as long as we remain above that transition level. We do note the delta node that's at the 4355 strike, which is coincident with the transition. Could be a good parking spot, but we actually think we're going to push north here today. If we do push north, we're looking at that 4380. It's a fairly weak delta. That's a fairly weak gamma. Of course, intraday volume will impact that here today, but also look up there at 4415. It is a minor level in terms of gamma. It's right after the 4410 line, and you can see that in aggregate, if we push upward today, all of those calls are going to be going in the money, and then the charm flows are also going to be supportive, and that's going to push us up. So, we could run higher. We don't think we're running up to 4450, but if we see any targeting to the upside, especially above 4410, sure, it could pull us up. Just make sure you understand that dynamic. The 1 DTE, kind of the same thing. You can see that 4410, very, very important, very strong across both of these. When we see strikes align across multiple time frames, that means something, and you should be paying attention to that. 4350, little bit of weakness. We don't usually expect gamma to come off below us. That's an interesting structure here, as well as the 1 DTE COI is also 4350. So what this is telling us right now is for tomorrow, we're already deep in call territory, and the overall charm flows and delta flows for tomorrow are going to be very, very supportive. People are going to have to figure out what they want to do. If they want to monetize those, that's going to be a big deal. If they take those off the table, that actually could be some downward force. But in the absence of monetization, look at the 43.25 and 43.30. We have a double line there on the put side. Those are out of the money puts, and those charm flows are supportive as long as we remain above those levels. So all this being said, we have got a pretty substantial floor underneath us going into tomorrow as long as we remain above 43.50. So be aware of that. Looking out to Friday, this is the combination of the AMs and the PMs that are coming off. So the first thing to note is that we've got almost $1 billion net notional gamma dollars coming off the table. That's a big number. Don't let anyone tell you otherwise. This is a single date. This is the AMs that come off right in the morning, and so have really no value on Friday, but that settlement value, those deltas do matter. And then the PMs come off obviously at the end of the day. 5.26 million contracts coming off. That's about a quarter of the overall structure of the SPX combo, AMs and PMs. Just be aware of that. That's a lot of calls that are coming off the table. So big numbers, and you can see on the middle of the page the 4,400 line is pretty substantial. A lot of positive calls below us, and the 4230 indicated as negative gamma down there is really far below us. And so for Friday, just a tremendous amount of calls that are set to expire, and we'll see where the dust settles. When we combine today, tomorrow, and Friday into one picture, you get this. Again, over $1 billion net notional gamma, which is a big number. It does indicate that the upside target's 4,400. That is both minus GEX. As you can see, it's the largest dominant expiry in front of us, and it does show a runway in the notional deltas all the way up to 44.45. So that can be pretty substantial. Be aware of that. We have no illusions that we're going to get to 44.45 or 44.50 by Friday, but we could. And we saw the cliffs, the gamma that is targeted right now to 44.10. So we do think 44.10, 44.15 is certainly a possibility, and then that becomes a nice launching pad to go north. Taking a look in the next week. Remember, a shortened week and due to Juneteenth. And what's important here is that 4,400 remains in play. And you can see in the notional deltas, we got green above, green below, all for next week. A lot of calls that are there are set to come off, but they have to be navigated. So they will be in place until they expire or are closed by the participants. A couple things to be aware of. We are seeing a little bit more gamma appear into negative gamma appear into the structure, and you can see that by the red that's shown in the gamma column and the net GEX column. Of interest is that 4,300 line. That is next week's call open interest expiry, and that's a big deal because what that is basically saying is that we have a large amount of in-the-money calls that are basically coming off, and so this will have impacts. And again, we'll just have to see what participants do. Do they use the cash settled component of the SPX, or do they actually roll these out? Do they take their money and put them into puts? Who knows? You don't know. I don't know. Don't pretend anybody knows, because they don't. Taking a look at the view into the end of the month. This is kind of interesting. So this is beyond the next 2 weeks. So it's not this week or next week. It's the following week, which is the end of the month. And you can see that 43.75 is the dominant line. 4,400 is no longer in our crosshairs, but look at the 43.20s, right? We've got a lot of short calls from the JPM strike that are set to roll, and that's going to probably be a pinning mechanism. We'll see. It depends on if we're above that 43.75 strike or not. The further away we get, the less the impacts of those 43.20s are going to be. So we'll just have to see how things go. But you can clearly see the half levels at 4,400 and 44.50 are clearly indicated, and the deltas are green. right? They're green all the way on down to that JPM. So this is still painting a bullish picture into the end of the month, irrespective of charm flows and things like that. This last slide is the combo slide. It's remarkable. It's remarkable on a number of fronts. So let me take you through this. So first of all, in the upper right-hand corner, you see that the net gamma dollars, so this is a net gamma notional, is now 2 billion with a B. We have never, in over 2 years of tracking this, 2+ years, we have never seen a net gamma notional of this magnitude. This is extreme bullishness, and it really shows that the market is just throwing caution to the side and really focused on moving the markets up. When you take a look in the middle of the page here at the net delta dollars, you see green all the way up the page. So out of the money call speculators are dominating all of the in the money puts in terms of delta. In the money puts have a delta of greater than minus 0.5, so 0.5, 0.6, 0.7, negative of course because they're puts. And that's all being stomped on by out of the money calls, which by definition have a delta of less than 0.5, so 0.5, 0.4, 0.3. And so for no red to appear overhead up through 45, 35 at the top of the page tells you we are completely, no question about it, as dominated in calls as you have ever seen in a structure. This is very, very remarkable. To the downside, these are in the money calls. They have, by definition, a delta of greater than 0.5 all the way up to +1. You can see, notionally, huge green numbers there, right? So when we take a look at that, there is no chance right now that put speculators are going to be able to win unless they start really targeting strikes, and we're not seeing any sign of it. The 4320 shows a little bit of red gamma on it, and that is the JPM strike, which is not liquid, for the end of the month. That's 39,700 approximate short calls sitting there, and they are figured into this. So it's turning the gamma slightly negative, but you can see the net notional delta is at 7.8 billion just today. So that's just a huge number. So everybody's on one side of the boat. And when everyone's on one side of the boat, you should be thinking about, how do I protect my downside? Downside insurance would be cheap. How do we know everyone's on one side of the boat? Take a look at the picture. Extremely large line at 4,400. Like I said, over 70,000 contracts, net equivalent GEX sitting up there. Huge number. The next one that's rearing its head is not surprising. It's now the 4,500 line, and it's got 43,000 contracts. In isolation, 43,000 contracts would be a normal plus GEX number, and you can see here that it's actually second to the 4,400 line. 4,300 is called out here. That is kind of the last drop down before we get into a transition that starts breaking down. 4,250, I think, is really a line in the sand we've got to be very, very careful of. And all the way on down to 4,100 or so, or maybe 4,145 or so, is a transition area that is largely broken. You can see it back and forth. It's not going to be well defined. We're going to be able to move back and forth within that. It's going to be very, very hard to ascertain what's going on if we pull back into that area. By then, your downside exposure should probably be increasing over a longer horizon. Last thing to note, minus GEX coming in at minus 10,000 contracts, minus because obviously it's puts. The thing to take away here, it still remains as some of the weakest minus GEX levels that we're seeing in 2023. We haven't seen this type of imbalance be sustained for this length of time. So that imbalance provides opportunity for us, and because volatility is so low, IV is low, Vega is low, the cost of options is low, you should really be looking to get some downside exposure here. So with that, I will bid you farewell. If you have any questions, comments, would like to come in, kick the tires, go to GammaEdge.us. In the upper right-hand corner, there's a pricing tab. Click on that, fill out the blanks, come on in. 14-day free trial, all the tools turned on, great group of traders, a lot going on. A lot to digest. We take gamma, delta, charm, vanna, and we make it actionable. But there's a learning curve, and be prepared to, come in if you want to learn. Twitter, follow us at GammaEdges with an S, please. And then here on YouTube, two things. If you like today's commentary, I know it was a little long by intention. If you like today's commentary, give me a thumbs up. It tells me that I'm providing content that you find actionable. And then 2, subscribe so you get notified next time we post videos. So with that, I will bid you farewell. Make it a great hump day, and we hope to see you in the Discord. Thanks, everyone.